Michelle, I see you shaking your head already. Michelle Girard is head of U.S. markets, U.S. at NatWest's markets. Just want to get that title in there. So why are you think because of inflation they won't be able to do it?
That's exactly right, Kelly. I mean, the market is expecting that the economy is going to slow, and that will solve all of the inflation problems, or at least get the Fed into a position where they will shift their focus from inflation more to growth. I just don't think the inflation numbers are going to help the Fed out here. We ourselves have the inflation forecast at the end of 2023 still at 3% if you exclude food and energy. That's too high, I think. And it's going to make it very difficult for the Fed to be able to shift its focus. I think that's going to be a real surprise for markets, as you said, that are looking for a rate cut. I don't think the Fed's going to be in a position to do that.
And you're saying this acknowledging the slowdown, acknowledging even a possible recession.
Yeah, I mean, recession doesn't mean that you aren't going to necessarily have inflation. Of course, that's the worst mix for the Fed, but it's one that we've seen historically, and it's going to put the Fed in a very difficult position. Now, of course, the Fed can talk about the fact that looking forward, they think slower growth will help to bring inflation down, but Fed credibility right now is not high in terms of their own inflation forecast. And the Fed themselves have really started to look to basing policy on the actual inflation they're seeing. And again, if the actual inflation numbers have not come down as much as the Fed needs to see, they're not going to be able to reverse course that quickly. The Fed Chair Powell has said that the priority is going to be getting inflation down, even if it means causing some economic pain.
Yeah, so you look at the markets and you say, okay, and again, maybe you read everything that I read this weekend, but it was like everywhere I turn, everyone's talking about recession. Okay, fine. But it's this binary thing where there's this expectation of, well, that's the final verdict. That changes everything. And I just wonder where you think, I know this isn't, your purview per se, but, let's talk rates, for instance, or the stock market. I mean, if they're not talking about a macro event that would give the space to cut rates, how much might that change the way markets are currently pricing this?
Well, it's exactly as Steve pointed out. The markets are looking for rate cuts by the end of next year. And part of the rally that we've seen in the last few days, I know today yields are up, but last Friday on weak economic data, we saw 10-year yields fall sharply. And that is on the expectation that the weakness in economic activity will really slow the Fed's ability to keep raising interest rates or even precipitate a rate cut. It would be a big surprise for the markets if, you get weaker data, but inflation doesn't come down, and it would cause a rethink, and I think put upward pressure on market rates.
Yeah.
If that whole thinking premise about Fed rate cuts goes away.
Do you think it serves the Fed? Final question, as we look to that language from Powell on Wednesday, which will probably look. He knows the markets; they understand the state of affairs. Do you think he wants to push back against this pricing in of cuts because they would rather see higher long-term rates? I mean, I'm just curious what, sort of the second or third order thinking here.
I just have to say, Kelly, I hope the Fed gets out of the rate guidance business a bit because, the Fed has tried to be transparent. It's tried to signal to the markets and guide it to where it wants the markets to be priced. But that has come back to bite them. And so I suspect that they will not try to be too prescriptive about where rates are headed. And again, just keep markets focused on the fact that the Fed is going to respond as the economic data and the inflation data warrant. And I think they're going to really work. I think they're going to try, at least we hope they will, to actually not try to do as much in terms of guiding rates, because that's just not worked in their favor, obviously, in the last several meetings.
It's fascinating. Michelle, thanks for bringing us this point of view today. We appreciate it.
Kelly.
Michelle Girard.